All right, good morning, everyone. Sorry for the late start. Let's kick it. Okay. Friday session in the States was a little bit soft. I think a little bit of nervousness coming into the weekend ahead of the Greece situation. That being said, it wasn't total risk off. We were only down about 0.3% in the Nasdaq, about 0.5% in the S&P, and a lot of that was kind of given back right there at the very end. But bottom line is that the markets held on incredibly well going into the weekend. I think just incredibly complacent that the deal was going to happen, and right now we're looking at S&Ps up 13 points early in the session. Obviously with the expectation that we've got a real deal on the table now for the first time, and that things are going to be just fine going forward. Bottom line is that as soon as that's over, we're going to see the market probably resume back to some sort of normality, and we'll probably be paying attention to U.S. Treasury yields again. We'll be talking about where we are in the cycle and that sort of thing. We had a lot of big movers last week again in the tech space. Another major IPO. We had Fitbit coming out. Big week last week off of the back of its IPO. We've had the rig count, which is actually looking like it's starting to flatten out a little bit after it's really been dropping every week. Pretty much flattening out right now. And you're starting to see that in the oil price as well, also starting to level out at the moment. All right, moving on to the Asian session. Nothing really important, I think, to look out for there. Besides the Shanghai market, which continues to sell off a little bit, but the Hang Seng has been totally disconnected from what's been happening in Shanghai. Shanghai is in correction territory already, and that's happened in about 4 or 5 sessions. So the volatility there is incredible. One of the things that I read a few days ago is about the ETF, the Chinese ETF in the States. The main listing there is sitting, I think, if I'm not mistaken, about 17 or 18% of the free float, and the ETF is short. So, there's a lot of people out there that do have the short on as well. Maybe slow the ascent or the descent as it falls a little bit, but we obviously know there's a bubble there. Whether or not this is going to be deflating or not is anybody's guess. All right, let's move on here into corporate action. A couple stocks going ex-div today: Tiger Brands, Vodacom. Just keep an eye on those. If we look at market data today, very little to look at. We've got European consumer confidence, and then we've got existing home sales in the States. So, all right, looking at the maps, I'm not going to go too deep into anything here on the session. The real issue is that we haven't had any major moves in kind of the U.S. index for the most part, and our market's kind of been a little bit low volume, drift around. A lot of things being inside a bit of a trading range as of late. But a couple of things moving out. I mean, one of the things here, we've got a chart up here already. We'll look at, sorry about that, is Capitec. So Capitec is actually kind of fell below what I think was its support. Let's actually look at this in a 30-minute. And you can see there, we've really been range bound after dropping major support back up here. We've been range bound, and these ranges are small when you think of things in percentage terms. You can see that we were really hanging in that range somewhere between 480 and 495, and we really dropped out in the bottom of that and closed on the lows of where it has traded for the most part down here at 470. So I think there's maybe a little bit more left to the downside, maybe not a whole lot left. And if we look at the chart on the yearly, we've dropped out of that head and shoulder pattern. A lot of the stocks have gone head and shoulder. A lot of them have gotten to or close to the target. So that may end up being kind of some of the areas where they bottom out. I still think maybe there's a little bit left in this one to the downside. Maybe throwing out a target down here closer to 450, 440, 450, somewhere in there. But at some point here, the sell-off's going to get a little bit long in the tooth. Could be waiting for a big capitulation day to have a nibble on a stock like this. Next one we'll look at is ARI. So we looked at this one last week a couple times. We talked about if it drops. Finally did get it to drop on Friday. Definitely a little bit of a head and shoulder setup here as well. And this has been some of the mining stocks have really been bouncing nicely off of some of the support levels the last few weeks. This thing has just really struggled to ever get any upside momentum. I really think that this is probably still worth a nice short. The target here is well below $70, and I think that I think it can definitely happen, especially with the lack of bounce that it had when everything else was really bouncing. Next one we'll look at is Investec, INPs here. So you can see also this is not as classic simply because the action here, it was very vertical and very short term, but we did get down here and test this 108 level a time before as well. If we drop 108 today, then I think this thing also has a significantly lower target. A lot of people out there like some of these European financials, especially maybe some of the British financials. I know this one obviously has exposure there, but bottom line is the setup's here technically, and if we drop support at 108, I think that we definitely will trade significantly lower if we can trade below 108. And the last one I want to look at this morning is Sunlum. So Sunlum has been in this range forever. We talked about this the other day. I mean, it's been a month basically. It's I would say, yeah, we went all the way back to the 29th. So we're getting right up onto a month of trading in this range. And it really is still, I mean, it closed at 66.42. The range, I would call it 66.50. And so we pretty much closed at the bottom end of that range. If we push lower, and I would say, especially if we see this thing trading 66 or a shade below, then I would say that it's breaking down, and that we can maybe leg down the same height of this channel, which is probably about 2.50 Rand. Will give us a target about 64, and that would be a completion, I think, of the target on the breakdown here from the 72 to 81 channel. That would really give us more or less what our target should have been on the breakdown there. So just keep that in mind. If we do drop, I mean, right now S&P futures are up 14.25, so don't expect us to exactly fall over this morning. I think almost everything will be opening higher, but just keep that in mind. If we do start to go offered later, this thing's been trading very poorly relative to the market. It drops 66.50 and holds below there, then we can definitely see 64 pretty quickly. And that's it for today, guys. Good luck out there.